So NVDA is the culprit today for the NASDAQ going down. They reported, the CFO said basically their earnings are going to be softer than usual. And this is what's happening right now. Markets are going down because consumer is not spending as much because the expense of product, and the consumer is not making the money they used to make. So when costs go up, inflation, and consumer makes less, what do you get? You get a slowing economy. I think the reality is that we need to accept the reality of markets are going to consistently guide down with companies such as like Walmart came out and said their things are getting harder to sell because of the cost, but also the consumer has less money. Target the same way. Abercrombie and Fitch missed. You're going to see this consistently be the case. And I think it's something that, just get used to it. And so go to the things that are going to be the defense to the retailers, to the consumer spending. I once had a client who said to me, he says, at the end of the day, we all need two things, shelter and food. And even housing is starting to see a slow off. But it's that fact that eventually we're going to be priced out of the market when it comes to housing. And in a lot of areas, people are. And you're going to see that go down. You see lumber prices are going down. You see all of these things that over the last 2 years have done really great are now not. Amazon's at or below its pre-COVID prices or lows. So March of 2020, I believe it's back to where it was there. NVIDIA, it looks like the same thing or is getting there. All these companies that basically got juiced up because of government money are now coming back down to reality. And the thing about it, what's different between now and 2019 is the fact that we have inflation, the cost of goods are higher. We have what's that thing called? Supply chain issue. That's a problem. I mean, there's like 1,800, 2,000 freighters sitting off the coast of China. I saw this satellite picture of it, and it basically they're not offloading, they're not unloading, and there's a glut over there in where this stuff is. Is it planned? Is it part of the game? Maybe this is how the U.S. loses its number one status. Who knows? But at the end of the day, I think the reality is you should expect markets to go lower. Now, the market that looks like it's starting to move higher is the high credit quality bond market. The MOVE index, which is the volatility index for basically the treasuries and higher credit quality bonds, has been falling in relation to where it was rising, over the last 2-3 months. And now yesterday it closed below 111, closed at 105, a very big move in the MOVE index, which means the volatility in bonds is falling and the move higher in stocks or move higher in bond prices are going higher, which means bond yields are falling. So how do you play that? Well, you can easily play it through an ETF like TLT, some of the others. You can use a investment grade bond, mutual fund, those kind of things. So those who have been in bonds and been on this roller coaster of bonds, up and down for the last year or so, are now on the sort of upside of things. So if you're looking for a intermediate term trade, consider bonds. I mean, consider one of the ETFs in the investment grade area. Consider, treasuries, those kinds of things. This is not advice. Please remember that. These are not recommendations. But this is what I see happening. I see these rotations. And this is one of them. Bonds are, they're typically not sexy, but this isn't about being sexy. This is about providing and preserving wealth. This is about making your family wealthier, and bonds are one of those areas. If you're adventurous and are able to short things, when we get these upticks on low volume, this is where you put on a short position. And right now, the most obvious short position, broad short position is, could be the Qs because it's heavily tech related. And what's getting beaten up? Tech. What was it? Apple came out and said they're basically coming up short on supply because of semiconductors, that kind of thing. Flip over to NVDA, and they're guiding software. It's about getting things made. Well, where are things made? Well, they're made overseas in China, Indonesia, Taiwan, all of these things. You've got this geopolitical warfare between China and Taiwan right now, and that's where a lot of the semiconductors are made. So it would be totally understandable that these companies are in those categories of technology and, cell phones and all this kind of stuff. Heck, we need semiconductors for our cars. It's all being affected. And I think if you just pay attention and you look for these things that could be, definitely indicators to the economic conditions of our world today, the reality is it's not getting better. And with the cost of things being so high, the consumer is not getting better. I'm looking at things and I'm going, things are expensive. Things are getting more and more expensive. And when you live on a fixed income, it's tight. So you have to, 1, be defensive, 2, look for the opportunities, and 3, get to work. Get active. Be productive. Make these things happen. And I think that's where we're quickly going. I'm curious to see where we go with the news throughout the rest of the month and as we get into June. But more importantly, when we get into July and we start to see the true earnings of these companies this second quarter, that to me will be the capitulation of this market. When Amazon reports nobody bought anything, or very few people bought anything, the cost of shipping it went through the roof, and we didn't make any money. We actually lost money. And when you see that consistently throughout earnings, I believe that will be in July. That is, to me, where you'll get that capitulation. That's where you'll get that drawdown, hard drawdown, where the market is like, oh gosh, we're going broke. That is when you start to buy. That's when you start to go through your shopping list and you buy good quality, basically solid companies who are part of building the overall infrastructure and system of the world. That's what when you buy it. So the Walmarts, the Targets, the NVIDIAs of the world, the Snaps, Snapchats, the Facebooks, the Apples, the oil and gas industry, consumer staples, consumer discretionaries. That's when you pick the core solid companies that will survive. And when they are so beaten down and everybody is yelling fire in a crowded gymnasium and trying to go out, the single door that's open, and there's massive panic, and you see the volume push markets lower, that is capitulation. That is when you need to buy. So, take care. Hopefully this has been helpful. Hit the subscribe button. Please hit the like button. Leave any comments below. I look forward to talking to you more in the near future. And be safe, protect yourself, but most importantly, live loud.